Well, Mr. Volcker, for the last couple of days you've been presiding over this discussion on sovereign wealth funds, but against the backdrop of an extraordinary international financial crisis. And I wonder how you see the two relating to each other. Do these kind of funds have a role to play in helping resolve this crisis?
Well, they have some role in helping to resolve it, but I don't want to overemphasize it. When particular banks or investment banks or other institutions have got in trouble, they now can look towards something called sovereign wealth funds as a savior for an individual institution. Well, that's not going to happen very automatically when there's great uncertainty about the future of an institution, but it does happen on occasion. It's helpful. It's not going to change the nature of this crisis. Actually, I think it may redound to the benefit of sovereign wealth funds over time, because to the extent they can invest now, or one of their early investors during the recovery, it will, I think, improve the image of sovereign wealth funds. So nobody heard of subprime mortgages 3 years ago, and nobody heard of sovereign wealth funds 3 years ago. Nobody heard of banks collapsing 3 years ago either.
These, after all, are a new kind of fund. You were saying yourself that 2 or 3 years ago nobody had heard of sovereign wealth funds. Do you think overall it's been a positive or a negative development in the international system?
I don't know if it's positive or negative. It's a result. It's come about because of the nature of open markets, and come about partly because of the in particular circumstances, the extraordinary price of oil or the extraordinary surplus of China, to take two leading examples that are not necessarily permanent features of the international scene. But they do present a challenge, because we think of these markets operating on commercial criteria as private profit-making institutions. And when you have a large potential conglomerate which owes its loyalty to a country, not the stockholders, although it raises a question now. In stating it that way, of course, the country is a stockholder, in effect, and the country, to the extent the country is interested in the earnings, and they operate these as a private company, as a private fund, the better off we will be. And that's what a lot of this discussion amounts to. Can they replicate, in effect, what would be a private investment fund?
Looking at it from the point of view of the regulator or the authorities in charge of a given market, do you think there are special rules or special precautions that need to be taken in dealing with these kind of funds?
I think most governments are going to say there are certain areas which we will label national security that we don't want owned by a fund owned by a foreign country. And the political battle, if battle is the right word, that will be fought around what is the legitimate definition of national security. And that phrase can obviously be used rather narrowly and specifically, or very broadly, and that's what a lot of the discussion was about today. And I think we want to resist the temptation to define that too broadly.
Right. Well, you said in your lecture on Saturday that the international financial system that we've lived with for the last 20 or 30 years has failed.
I don't think any other description is adequate.
And so, in other words, we have now to develop a new and different system. What do you think will be the main features of that new system?
It's full of uncertainty, but and it will be developed out of the spontaneous reaction of the market to what's going on, as much as from government actions. But what we see going on, which has its pluses and minuses, is big institutions getting bigger. And medium-sized institutions, or even large institutions, without an anchor of government support and oversight, are in a particularly vulnerable position. Same time, we have seen, apart from the crisis, a whole proliferation of private funds, hedge funds, equity funds. So we may be moving toward a world of some mammoth institutions which are consistent with the proliferation of particular smaller funds operating outside or almost outside official surveillance.
So you think it's going to be a more cautious world and perhaps a more heavily regulated world?
Well, I think it'll be more cautious for a while, for sure. And I think the big institutions will certainly be regulated, and I think we're going to have some very big institutions. Part of what I don't like about that is these big institutions, I think it's going to happen, but that they have many different functions that are inherently in conflict of interest with each other. And it's very difficult to control that, which is part of the reason that smaller operations outside will have a competitive advantage in some cases where people want to avoid those conflicts.
Well, I suppose, after all, risk is the essence of entrepreneurship, the willingness to take risks, and that is, after all, one of the main factors, if not the main factor, in human progress. Do you think there's a risk or a danger that there will be fewer risk takers now, and therefore less progress?
I hope there will be fewer risk takers. We had a little too much. The combination of risk takers and very fancy financial engineering has been pretty potent. But when I say too much risk taking, I think there's a general consensus that compensation practices got out of line and promoted risk-taking without much penalty for the risk going bad for the individual perpetrator. He might lose his job, but often they've lost their job with a big going away present. And I think compensation practices really need to be changed. It's a very difficult area.
Well, you've watched these people from different professions and different countries discussing these issues over the last day or two. Do you think they've benefited from it, and what do you think they've taken away from it?
I was interested in the beginning where some of the people said they came voluntarily because they wanted to. Others came because their boss ordered them to. But I think both thought it was very useful in the end. Good. They were glad they got ordered.